Hello and welcome. Today we're going to talk about the wealth transfers that happen over our lifetime. We've talked about that in other videos, but I want to just take a minute and really kind of bring home the point. We're going to start, for example, with taxes. Taxes are a significant part of our lives. And in addition to federal tax, income tax, there's Social Security tax, there's Medicare tax, there's sales taxes, there's excise taxes, there's all kinds of taxes that we face during our lifetimes. And so for the average household, if you were to average, say, $100,000 per year over your working lifetime of 40 years, you'd bring in about $4 million. Now think about it for a minute. If we add up all the different taxes that are assessed to you during your lifetime, I think you'd be astonished at the percentage, the amount of money that actually leaves your paycheck to go towards all the taxes by the time you add them all up. So we're going to look at what would happen if you had throughout your lifetime, the total amount of taxes you paid in all forms amounted to about 30% of your income. I know that sounds really high, but I think if you start looking at federal tax, state tax, and all the other taxes that you pay, that figure is not going to be too far off. So that would mean that you would experience a wealth transfer over your lifetime every single year of about $30,000 a year. So if we look at our calculator here on the screen, you're going to see that $30,000 a year for 40 years is $1.2 million. Now, remember, if you averaged $100,000 of household income over your working lifetime, you would have earned $4 million. And here we're going to take $1.2 million away from you. And we're going to distribute it to federal bureaucracies, cities, municipalities, etc. It's money that is being transferred away from you. And by and large, virtually none of it ever comes back. Now, do we get some services for those, some of those taxes? The answer is yes. And I'm not saying that taxes are not necessary. But what I do want to share with you is that some taxes can be mitigated. Some taxes can be reduced, such as a federal and state income tax. So let's just take a look at what this wealth transfer really is, because in addition to wealth transfers, there's something called a lost opportunity cost. And the lost opportunity cost is what could you have earned on those dollars if you had them. So let's just, for fun, let's apply a 6% interest rate factor to these dollars. It's $30,000 a year. Now remember, it was $1.2 million that left your checking account, was taken out of your paycheck. What would happen if you had every dime of that available to you, if you hadn't had to pay those taxes? That number is an astonishing $4.9 million that had you been able to get 6% return, and again, had there been no taxes on that 6%, you would have had nearly $5 million. So the lost opportunity cost is contained in two parts, meaning there's the actual principal that you lost, the $1.2 million, but then there's all the interest that you could have earned. And in this particular case, it's $3.7 million. So while we can't really get out of all the taxes, what if we could mitigate their impact on us? What if it were possible for us to cut these taxes in half, for example? What if by proper planning and structuring how you do things now and in the future, what if you could cut those taxes by 50%, so that instead of $30,000, it would be $15,000. Now, that $15,000, okay, would amount to $600,000, obviously, half of the $1.2 million. But now, what if you could earn some interest on that money? So you didn't send it off to the government. You didn't send it off to the state or the local municipalities. You were able to retain that. And what if you could get, say, 6% on that? So if you could get 6% interest on that, that would amount over your working lifetime to almost $2.5 million. That is a substantial amount of money. That is a huge amount. Now, even if you had to pay some tax on that, let's say that the net effect, let's say you had to pay 20 or 30% tax. Let's take 30% of 6%. That would be just a little over 4%. So let's just look at 4.2%. 4.2%. Okay. That's still $1,557,000. So what we're helping our clients understand is, first, where the wealth transfers are and what the principal amount of that is. And then helping them identify ways to reduce or mitigate or offset those losses. Now, this is taxes. This is just one area. There's another area that comes to mind, and that is debt. So let's take a look at debt. The average amount of debt in this country over your lifetime runs about 34% of your lifetime earnings. Now, again, that's, by the way, that's after tax. So it amounts to about $22,000. So let's just look at that, okay? I'm going to clear this out here, and we're going to put $22,000 in. $22,000 and over 40 years. And we come up with $880,000. So now we went through what the tax wealth transfer is. This is the debt service. This is the student loan payments. This is the car payments. This is the credit cards. This is every thing that you purchase over time using the installment plans. Okay. And so you can see that, again, this is nearly $1 million. And we could do the same exercise here. And that is, if you could get, say, 6% interest on it, that's a wealth transfer of $880,000 plus all the interest for a total of $3.6 million. Again, these are astonishingly large numbers. Well, once again, what if you could mitigate? What if you could arrange your affairs so that instead, over your lifetime, instead of averaging $22,000 of out-of-pocket expenses for all these various consumer debt, what would happen? Well, you can see that, again, $440,000 is what would leave your account. If you could get 6% on it, you'd have $1.8 million. Even if you had to pay some tax on that, we're going to look at 4.2 million or 4.2%. And that gets us down to $1.1 million. So by understanding wealth transfers, arranging your financial affairs to reduce the impact of those wealth transfers, you potentially could put anywhere between $1.5 to $2.6, $2.7 million back in your pocket. So we want to have the opportunity to sit down with you and identify the wealth transfers in your life. We'd love to help you identify them and then look at ways to position your capital and your cash flows so that they're much more efficient. They are reducing the wealth transfers in your life, and we're recapturing them. We're diverting them away from the entities, the financial institutions, the government entities, and so forth that we normally would send those to, and we're going to direct them into accounts that you own and control. And by doing that, you will create more wealth faster than by chasing return. Because you can see that even if we didn't get any interest on those dollars, if we got zero interest, there would still be, from your taxes, you would save over $600,000. And from your consumer debt, you would save over $400,000. That would be $1 million that would be transferred or kept from being transferred to you and would accumulate for your benefit. So if you'd like to take the time, we'd love to visit with you. So click on the link below and schedule a free, no obligation, 30-minute consultation to help us so that we can help you identify these wealth transfers and then design your financial processes so that we are reducing and eliminating them, or at least reducing them to the lowest level possible. And while you're at it, if you are so inclined, we'd love to have you click on the other link so that you can register to have access to our financial education video library, where we go into more detail with a lot of these ideas and concepts that we talk about in these short videos. And obviously, we'd love for you to share what we've created here, and so you could go on our YouTube channel and like it and share those videos with other folks. So looking forward to helping you identify the wealth transfers in your life, reduce them, mitigate them, and divert those dollars back to you. And we look forward to helping you in the future.